Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality free trading education. Now, without further ado, let's jump straight onto the charts.
In this video, I will be speaking about EURNZD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which has been creating a series of higher highs and higher lows. In fact, we shifted essentially from having a bearish market with lower lows and lower highs to now having a bullish market with higher highs and higher lows. In fact, we can see a series of higher lows starting from here and a series of higher highs starting from here. So clearly at the moment we are in a bullish market from a monthly perspective, and we could expect more bullish price action to be developed. We can also notice that from a structure perspective, this is the previous high. So there is the possibility for a potential retest of this previous resistance turn support before then getting the continuation to the upside. Going down on the weekly time frame, what do we see? Well, from a weekly perspective, first of all, we can see how strong this previous resistance turn support area is, and we can also notice how we have an impulse and the start of a correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see that we have a market which has the 50% and 0.618 Fibonacci retracements lining up exactly at this area that we could expect the market to want to go and test before then potentially getting rejected to the upside. So we could expect a bit more bearish price action before then getting bullish continuation away from this zone. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the big players in the market are doing, we can see that precisely on the euro, net positions with the last reports have been increasing. We went from having 143k net positions all the way up to 169k net positions, showing how longs were getting increased from 215k to 243k. And overall, if you look at the shorts, we went from having the high of 82k shorts to now having 74k shorts. So institutions are adding longs and closing shorts on the euro, making it stronger. If we check the NZD, we can see how the NZD in the long term is actually getting quite bearish. We went from having plus 10.8k net positions with more longs than shorts, 16k longs compared to only 5.3k shorts, all the way down to now having a negative net positioning, so the complete opposite, with more shorts than longs. In fact, we have 16.3k shorts compared to only 13k longs. So overall, the NZD is getting bearish and the euro is getting stronger. Now, this is very important because in order to have more bullish continuation, we need a strong euro and a weak NZD, which is exactly how institutions are positioning themselves. Now, if we go down on the daily time frame, this is where things get very interesting. In fact, from a daily perspective, we can notice how in creating this move to the downside, the market is also currently creating an M pattern. And in general, after the creation of an M pattern, what we could expect is a potential rejection to the upside for the completion of the M pattern at the neckline, which is the previous support turned resistance. So here on the daily time frame, if we will see a bit more bearish continuation, things would be very, very interesting because all this area is support as we have previously identified, and is also support here on the daily time frame, having previous daily resistance turn support to this area. So there is a good probability that we will have the completion of this M pattern at the neckline, since, as we have just seen, the euro is strong and the NZD is bearish. So how we could be approaching a potential completion of this M pattern? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the completion of the M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll over here, you will see that you have the possibility to join directly from here to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board.
If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.